Morning, everyone. How are you? Hope you are still well. Um, in today's presentation, I want us to look at cost accounting. I want us to look at cost accounting. So one can ask, what is this cost accounting all about? So cost accounting, grade 12, is a branch of accounting that deals with calculating, regulating, and controlling the cost involved in manufacturing products. So it helps a business determine how much it costs to produce goods, whether it's making profit or not. That is all about cost accounting. So why is it important? Why is cost accounting important? It is important that because it determines cost per unit. It also helps management set a selling price. Also, it assists in controlling and reducing cost. So that is that. So, main concept that you study in grade 12. So the main concept that you're going to study in grade 12 when you do cost accounting, like I'm saying, main concepts. So the main concept that you're going to study in grade 12, good people, is that you are going to study direct direct material cost, direct material cost. That is that. And when you're talking about material cost, that is the cost of materials used to make the product. For example, wood is used to make what? Furniture. And also the other concept is direct labor cost. Direct labor cost. So direct labor cost, these are the wages of workers directly involved in producing a product. For example, workers who assemble furniture, they are directly involved in producing a product. Then we are going to have what? Prime cost. Prime cost. So prime cost is the total of direct material and plus is the total direct materials and direct labor. Is a total direct material and direct labor. Meaning to say prime cost is equal to direct materials plus direct labor. So that is that. Then you're going to come across factory overhead cost. Factory overhead cost. So with factory overhead cost, you're talking about the indirect manufacturing cost that cannot be linked directly to specific product. This one, they are not linked directly to a specific product. For example, rent factory electricity, depreciation on machinery, factory manager's salary. Those are indirect manufacturing cost. So hope you're together with people. Then we have total manufacturing cost. Total manufacturing cost. We have total manufacturing cost. So with total manufacturing cost, that is the total cost of producing goods. Meaning to say manufacturing cost is equal to prime cost plus factory overheads. So that is that. The total manufacturing cost is prime cost plus factory overheads. So that is that. Then we have also cost of production per unit. Cost of production per unit. So with that, we are going to say cost per unit. That is the cost of producing one item, in short. So cost per unit is equal to total manufacturing cost. This is that divided by the units produced. That is that. So these are terms or that you're going to come across when we do this manufacturing or this cost account, this cost accounting. So let us now try to get to our questions. Let us go straight to our questions now and read this question paper, as it is very important that it will help us prepare for our term 2 that we're going to write. So that is that. So now let us get to our question. Let us get to our question. So it says a cost accounting, as it says, Major Good manufactures. It says Major Good manufactures wooden door frames, and it is owned by Peyon Mason. So their financial year end is 30 April each year. That is very important that we take into consideration the year end. So our financial year ends on 30 April each year. So that is that. So required now, as 2.1 says, refer to information A and calculate direct or raw material costs. That is 2.11. 2.12 refer to information C and calculate the factory overhead cost. Remember, when I was talking about the concepts, I did mention raw material cost, I did mention factory overhead costs. So the question is calculate factory overhead cost for the year by completing the table in the answer book. Also, it says prepare production statement for the year ended 30 April 2025. 2.14 calculate the selling and distribution cost. 2.15, it says, Major Good donated window frames to a community school. The window frames were produced using, of course, that would otherwise have been wasted. So calculate the amount lost in terms of sales as a result of wastage of the wood. So that is that. So here are the information that we're asked to refer to. As you can see, we have information A. We have information A. Information A, can see this is our information A. So we are still going to use this information when we do make our calculations. So also we have information B. As you can see, this is information B as well. We are going to use it when we do our calculations. So this is our information B. Then we have information C, we have information D, as well as information E. So we're going to use this information as we are doing our calculation. So without wasting much time, let us start from the first question and then try to treat it. The first one, you remember, we were asked to do what? To calculate the direct material cost. We are asked to calculate direct material cost. That is where we are, good people. Direct material cost. So when we do our calculations, we are going to use this given information. So now we're going to go to our information A and try to check as we were asked to refer to information A. So let us go straight to information A because we were asked to go straight to information A. So here we are on information A. As we can see, it says raw materials are valued using the FIFO, that is first in, first out method. All stock purchases are stored in a storeroom before being sent to the factory for production. So we have these raw material stock records. So as you can see now, we have balances on May 2024. This is our balances. We have our purchases. We have our returns. We also have raw materials used, issued in the factory, as well as the balance at the end. So now we are going to start with opening stock for us to calculate the materials available. So we are first going to start with opening stock. So what is our opening stock? So if we can check there, you can see now as you're going to calculate the value of materials available, our opening stock, we can see now we have this balance 1,520, which our total amount is 680,000. This is our opening stock. Are we together, good people? This is our opening stock. Meaning to say, we are going to say opening stock. So we are going to say meters cost per unit because these are our meters. This is the meters that we are going to work with. So we are going to say opening stock. We are going to say opening stock, opening stock. So our opening stock is 1,520, which our total amount is what? 608,000. So it means if you can just divide this much, 6,800, like to say 680,000 divided by 1,520. This will give us how much? This will give us 400. So 400 is unit cost. So 400 means it's our unit cost. So we are going to start with our opening stock like we are saying. So meaning to say, we are going to say opening stock, which we are saying is 1,520 multiplied by 400. Then it will give us this much, 680, 680,000, 680,000. That is our opening stock. Then we have July purchases. We have July purchases. We have July purchases with people. Then we can go to that July purchases. As we can see, here is our July purchases. We have 8,400 with a unit cost of 420. So meaning we're going to multiply this 8,400 by 20, and then we are going to get how much? We are going to get 3,528,000. We are going to get 528,000. This is what we are going to get as our July purchases. So hope we are together on that. This is our July purchases. Then also, or let me just show it here like we have said we are going to have on July purchases, we are going to have 8,400 multiplied by 420, and this will give us 3,528,000. So now let us go to November purchases. November purchases. So November purchases. So now let us come to our information. As you can see, this is our November. So we have 7,800. Our unit cost is how much? 505. So we're going to say 7,800 times 505. This is going to give us 3,939,000. 939,000. That is what I'm saying, good people. We are saying we have 7,800 multiplied by 505, which is our unit cost. Then it will give us 3,939,000. That is that. So this is our November purchases. So now we are going to look at the total now. Total. So we are going to look at the total available. Our total that is now available. Total. So on our total, it simply says we are going to add 680,000 plus 3,525,520 3,528, sorry, let me write it well. We are going to say we have 3,528,528,000 plus uh, 3,939,000. And all in all, they're going to give us how much? 875. They're going to give us 8,075,000. 8,075,000. This is our total available. This is our total available. So that is that. So good people, don't forget that we do have what? Returns. We have what? Returns. So now let us go and check the returns. As it says, returns. So we returned how much? We returned 400 meters with the unit cost of 420. So we're going to say 400 times 420. This will give us what? This will give us 168,000. 168,000. This is for the returns. So now we want to know the available after returns. So we want to know our available after returns. Meaning to say what we are going to do when you check that or when you calculate that available after returns, as we are saying available after returns. After returns. So it means now we are going to say 875 million, 8 million and 75, sorry, 8,075,000 minus 168,000. And this will give us what? This will give us 7,907,000. So that is that. Hope we are together on that. So now what is left now? As you know, we are still calculating what our value of materials available. So remember now, another step that you have to go for, we are to calculate now the closing stock. We are to calculate the closing stock. Remember, we are asked to use what? The FIFO, first in, first out. So now we are going to say closing stock. We are going to say closing stock. So with closing stock, good people, it simple says we are going to say 750. I'm talking about this amount, 750. You can see this is our closing stock balance on 30 April 2025. So we're going to 750 times 505. 505, this 505 comes from the latest purchase. It comes from our latest purchase. So our latest purchase is this much. This is our latest purchase before the returns. So this 505 comes from our latest purchase. So now this will give us how much? It will give us 378,750. So that is that. So now we are now, this is our closing stock, good people. Don't forget this amount is our closing stock. So it simply says now we are going to say, we are now going to say, for us to calculate the final answer, we are going to say 7,907,000. This is our available after returns minus closing stock, because closing stock is not a part of what? Of our year, of our financial year. So it's a closing stock, it means it's going to go to, we're going to take it to the next financial year. So meaning to say we're going to say 7,907,000 minus closing stock of 378,750, and this will give us how much? This will give us 7,528,528,250. This is our final answer. This is our final answer for direct material. This is final answer for material cost. So that is that, hope we understand. So this is how we came up with this material cost. Remember, this is what we're calculating. So now we can go to our answer book and write them in our answer book. So that is that. Now we can go to our answer book with people. We can go to our answer book. So here is our answer book. Remember, we are asked to calculate what raw materials. We are asked to calculate raw materials, direct raw materials. Remember our total available. If you still remember our total available, we have said our total available is 608, 608,000 plus that was our open stock plus our purchases of July that we have said is 3,528,000 plus our November purchases, which is 3,939,000. So all in all, they gave us 8,075,000. This is our total. So with this, remember, we did subtract what? Returns. We subtract what? Returns. We subtract returns. So our returns was how much? Our returns, you know, that is 168,000. So we are going to say 8,075,000, 8,075,000 minus 168,000, which is going to give us 7,907,000. So that is that. So from there, what we did, we have said now we to calculate what our closing stock. So our closing stock, remember, is what? 378,750. Meaning to say we are going to say 7,907,000 minus our closing stock. Our closing stock, if you remember very well, is 378,750. So our final answer is 7,528,250. That is that, people. This is how we came up with the answer. This is how we came up with the answer. So, 2.12, we were asked to calculate factory overhead. Let me just get to it. You can see we already given what? The incorrect. In our answer book, we already given incorrect total. So now let us go to information and try to calculate that and try to give what? The calculations where we are asked to calculate what? Factory overhead cost. Factory overhead cost. So that is that. So 2.12 says refer to information C, whereby now we're going to calculate the factory overhead cost for the year ended by completing the table in the answer book. So there is an answer book that we're going to complete. So first, we are going to do the calculations first before we can even go to the answer book. So let us go to information C because we are asked to go and use the information C. If well, if yeah, information C. This is what we are asked because it did say refer to information C. So this is where we are going to go. Refer to information C. So here is our information C, where it says there is no work in progress in stock. So now for us to calculate the what you call factory overhead cost, we are given the incorrect total of 3,670 and 860 and 860. This is this that I'm talking about. So the information B is the one that is going to help us, not information C. So the bookkeeper calculated the factory overhead cost as 3,670,860. This is the amount that the bookkeeper calculated. This is an incorrect amount. So even if we can go into our answer book, you can see here is the amount that we're talking about, as we are told that this is an incorrect amount. So now we are going to try our own to correct that. And then for us to do that, we're going to start with factory insurance. Factory insurance. Factory insurance. So we're going to start with factory insurance. Now let us go to information that talks about factory insurance. So there we have what? Factory insurance. We are going to calculate it. Now, if we can go to information that talks about insurance, we have what? Office insurance of 12,480. So I think you can see it. Remember, we are to adjust this amount. This amount needed to be adjusted. Like I've said, that is incorrect total. So we have to adjust it. So we have this much, 12,408 as insurance account. And we are told that on the adjustment to factory overheads, it says 80% of the insurance is allocated to the factory and the rest to the office. And the bookkeeper undercast the insurance amount by 2,550. So what are the actual insurance? This was undercast by this much. We want what? The actual insurance. Meaning to say, for us to get the actual insurance. So it means now we are going to say 12,480 plus 2,550 for us to get actual insurance of how much is going to be 15,030. So this is our actual insurance. Hope we are together on that with people. Hope we are together on that. So then we were told that now 80% of the insurance is allocated to the factory. So we have our insurance now, the actual one. So the 80% of that is allocated to the factory and the rest to the office. Meaning now we are going to say 15,030 multiplied by 15%. So that is that, which is going to give us 12,024. This is our factory now. Because we are told that 80% of insurance is allocated to the factory. So this is the one that is allocated to the factory. Hope we're together, guys. Let us follow this. So the bookkeeper, as you can see, the bookkeeper already included 12,000, already included 12,408. So the bookkeeper already included it. So it means now we have to say 80% of that. We have to say 80% of that. So it means 80% of this 1240 is supposed to be subtracted because it's for the office insurance, not factory. So we're going to say 12,480 times 80%. This will give us 9,984. Then we'll say 12,024 minus 9,984, and this will give us 2,040. And this we are to add it to factory overhead. So now we go to our answer book and write that amount. Factory insurance is what? 2040. 2040. That is our amount. Now we are going to go for factory depreciation on equipment. Factory depreciation on equipment. On equipment. So now let us go to our information. So now let us go to our information and try to calculate factory depreciation on equipment. Calculate factory depreciation on equipment. So this is where we are going to be. So, okay, here we are, good people. Here we are, good people. We are going to do depreciation adjustment. Depreciation adjustment. That is what you're going to do. Depreciation adjustment. Depreciation adjustment. That is what you're going to do. So we have depreciation on factory equipment. You can see what I'm talking about, good people. We have this depreciation, depreciation on factory equipment. I'm talking about this amount of 42,000. So we have 42,000. We have 42,000. So this need what? Diminishing balance. So we have to find what? We have to find cost price. We have to find cost price. So our cost price is how much? That is what we are going to do. That is what we have to look for right now. So what we are saying is that we are to find what cost price. But what we are going to do to make things easy is that is first to know our depreciation. First to know our depreciation. As we know our cost price. So let me just write it this way to make it easy. We have our cost price, which is equal to 42,000. Then our depreciation is how much? Depreciation is equal to 15%. Is 15%. So it means you're going to say 42,000 divided by 0.15, which is our 15%. And this will give us how much? This will give us 280,000. So that is that. So now we are to calculate what carrying value of 1 May 2024. So we have to look at the carrying value now. The carrying value. So the carrying value from 1 May 2024. I'm talking about this. The carrying value from 1 May 2024, that is accumulated depreciation on factory amounted to 38,000. So we need to say now we are going to say 38,000 now. So this is our 38,000. So 38,000 is our accumulated depreciation. So our carrying value, for us to calculate carrying value now, we are going to say 280,000, which is this cost, minus 38,000. So the 38,000 that I'm talking about is this one, the accumulated depreciation. We're talking about this amount. So we are going to say this cost price minus this accumulated depreciation, and this will give us 242,000. This will give us 242,000. Then we are going to say depreciation is equal to 242,000 multiplied by 15%, and this will give us 36,300. So the correct depreciation now, correct depreciation now is going to equal to, the correct depreciation is going to be equal to, correct depreciation on factory equipment is going to be 36,300. That is that. Then we are going to say 42,200 minus 36,300. So that is how we're going to say. So the bookkeeper recorded 42,000, but the correct one is what? The correct one is 36,000. So we are saying the correct, let me write it, the correct depreciation is how much? 36,300. But the bookkeeper recorded how much? The bookkeeper recorded 42,000, which is incorrect. The bookkeeper recorded 42, but the correct one is how much? Is 36,300. So we're going to say minus 36,000. We're going to say 42,000 minus 36,300. So then we are going to get minus 5,700. So this is how we calculate the factory depreciation on equipment. So now let us go to our answer book. So in our answer book, like we have said, remember on our calculation, we end up getting what? 242,000 multiplied by 15 over 100. And that is when you get what? How much? 36,300, which is the correct 36,300, which is a correct depreciation. 36,300, which is a correct depreciation. Then we did subtract what? 42,000. 42,000 is what the bookkeeper recorded, but the correct one was this 36,300. So it means you're going to have minus 5,700. Minus 5,700. Hope you are together, good people. So now we are going to do factory rent now. We are going to do factory rent. This is where we are now. We're going to do factory rent. So let us go to information, whereby we are going to calculate our factory rent. Hope you are still on one page, good people. Hope you are still on one page. So let me just wrap quickly, and then we'll do our calculations on factory rent. So that we do our calculations on factory rent, good people. Hope we are still on one page. Hope we're still on one page. I do believe you are still getting on what we are doing. So that's what will make me happy at the 12s. So now let us be on factory. Let us be on factory rent under our factory overhead cost. Factory rent. So here we are on our factory rent. Here we are on our factory rent. So on factory rent, you can see the information here that talks about the rent. As it says, Major Wood Manufacturers factory rent for 3 months. That is from 1 May to 31 July. So it means it's May, June, July. Amounted to 168,000. That is that. Get that straight. And it said PM Warehouse charges rent at the fixed rate. The Major Good Manufacturers has been renting 160 square meter for the past 2 years. With effect from 1 August 2024, Major Wood Manufacturers requested an increase in factory rental space by 40 square meters. So the rent for this increase has not been recorded. That is the information that we are going to use. First, now, let us do our calculations so that we can be able to get this correct. We do have rent for 3 months. So it means you're going to have rent for 3 months. You're going to have rent for 3 months. How much is our rent for 3 months? That is May to 31 July. Rent for 3 months is 1 May 2024 to 31 July 2024. That is 168,000. I'm talking about this amount. So monthly rent is, so now we're going to say monthly. We are going to say monthly rent. Our monthly rent is going to be 168,000 divided by 3 months that we're talking about. So it means now our monthly rent monthly is how much? 56,000. It's 56,000. This rent was for 100. This rent that we're talking about, or 56,000, it was for this 160 meters square for these past 2 years. So this 56 rent per month, because this is for per month, is for 160 meters square. This one is for 160 meters square. This rent monthly is for 160 meters square. Now we have to calculate rent per square meter. Rent per month per meter square per month is 56,000 divided by 160. So we are saying rent per square meter. So rent per square meter per month. So what we're saying rent per square meter per month. Per month. Rent per square meter per month, that is 56,000 divided by, I think we have said this rent is for this 160 divided by 160, and this will give us how much? 350. This is 350. So it means for that 160, for 160 per square meter, you are paying what? 350. That's what we're saying rent per square meter per month. For this square meter, you are paying what? 350 for square meter. So now, people, we are to calculate newly monthly rent. Now we are to calculate newly monthly rent. Calculate newly monthly rent. Newly monthly rent. So now we have to calculate newly monthly rent. So calculate newly monthly rent from 1 August 2024. It says, with effect from 1 August 2024, Magic Wood Manufacturers requested an increase in factory rent space. Now by what? By 40 square. So now we're talking about the additional space rented now. It was 160 square meters. Now it's now added with what? 140 square meters. So meaning to say now we are going to say 160 meters square meters plus now 40 square meter, that is additional now. So all in all, they will give us 200 meter square. So that is that. Now we want new monthly rent now. We want new monthly rent. So it means now we're going to say 200 multiplied by 300, 350. Remember the 350 it was for, that was a rent per meter square per month, this one. So this will give us 70,000. Now calculate total rent now. Total rent. So now you have to calculate total rent now. So for you to calculate total rent now, you are going to say 3 multiplied by 56,000, that is for month rent. 3 months, it was for 3 months, like you said, it's 168,000. That is that. So now we were told that August, from August 2024 to to the end of our financial year, which is April. So I still remember that our financial year is what is April. If we can still remember, financial year is 30 April 2025. So it means now it's 9 months because with effect from August to April, that is 9 months because you're going to say August, September, October, November, December, January, February, March, April. That is our year end. So it means it's 9 months. So we are going to say with people 9 times 70,000. 70,000 is this one for the yearly, that is additional rent. So meaning to say we're going to say 168,000 plus the amount that we get from here is 630,000. It's 630,000. So it means now we're going to say 168 plus 630,000, and this will give us the final answer of how much? Of 798,000. So this is the final answer for our rent amount. So now we can go to our answer book and record it. So for rent, like we have said, we have said it's going to be 630 plus 168,000. We calculated this 630,000, then plus 168,000, and this will give us 798,000. So now we are to calculate now the correct total factory overheads. So correct total factory overheads is 4,465,200. So that is that. Then you get your 9 marks. So hope you're together, good people. So now let us go to another question. Let us go to another question. Remember, we are asked to calculate now production cost statement for the year ended 30 April. Production cost statement. So production cost statement. So let us be on production cost statement right now. So first we are going to start with direct material. We are going to start with direct material cost. Direct material cost. So direct material cost is how much? Is 7. Direct material cost is 7,528,250. Where did we get that amount from? So this is the amount that you already calculated. This is the amount that you already calculated. This is the amount that I'm talking about. This is the amount that I'm talking about. Already we calculated direct material cost. So now we are to calculate what? Direct labor cost. Direct labor cost, sorry. So that is just a mistake. Like I've said here, we said it's what? Direct. Said it's direct material costs. Direct material costs. So now we are calculating what? Direct labor cost. So how much is our direct labor cost? So now we are to go and calculate it. We are to go and calculate our direct labor cost. So that one need us to calculate it. So that one need us to calculate it. Direct labor cost, direct labor cost. So direct labor cost, you're going to say this is our direct labor cost of 710 multiplied by 6,420 wooden door frames were produced and sold. So it means you're going to say 710 multiplied by 6,420. And this will give us our amount for direct labor cost, which is equal to 45 uh, 45 to 8 200 4,558,200 4,558,200. So now we are to record it in our answer book. So we have said the amount is 4,558,200. So that is that. So when you add these two, you're going to get what you call prime cost. So prime cost is direct materials plus direct labor. So it will give us 12,450. So that is that. So now we want a factory overhead cost. Now we want factory overhead cost. So factory overhead cost, we already calculated. This is the amount that I'm talking about. So that is 4,465,200. That is 4,465,200. So that is that. So now production cost of finished goods. Production cost of finished goods. So we want the production cost of finished goods. So that is production cost plus factory overhead cost. So the amount that you're going to get on that is 16,551,650. That is that. That is our production cost plus factory overheads. That is that. So we add that prime cost plus factory overheads. That is that when we get our 16,551,650. So now you get your 6 marks. You get your 6 marks. So now let us go to another question. So the other question says, calculate the selling and distribution cost. Calculate the selling and distribution cost. Selling and distribution cost. So with that one, we know how much is our variable cost. That is what you're going to look at. How much is our variable cost? Here is our variable cost, as you can see. Here is our variable cost. This is what you're going to use. We're going to say variable cost minus production cost. Our production cost is prime cost. So we are going to say variable cost minus our production cost. So let us go to our answer book. So you've seen how much is our variable cost. This is the amount that I'm talking about. This is the amount for variable cost. 14,380,800. So now we come to our answer book. So meaning we are going to say 14 million 380,000. That is the amount for variable cost. 380,800 minus our production cost. That is our prime cost. 12 million and 86,450. Where did we get this amount from? Maybe one can ask. This is our prime cost. This is our prime cost. This is the amount. We are talking about this amount. This is our production cost or prime cost. So we are going to say variable cost minus the production cost. Then it will give us the selling and distribution cost. So this will give us how much? It will give us 162,240. That is our answer. 162,240. So that is that. So now we are to move on to 2.15. 2.15. 2.15, it says Meiji Goods donated window frames to a community school. The window frames were produced using of cars that would otherwise have been wasted. Calculate the amount lost in terms of sales as a result of wastage of the wood. That is that. That is the amount that now we are to calculate right now. So there is a mistake that we made when I was calculating for selling and distribution cost. So let's go back there. Let's go back there. This amount is wrong. Sorry for that incorrect calculation. So it is supposed to be 2,294,350. That was incorrect total amount. So it's 2,294,350. Hope we are together on that, good people. So that is that. So now coming back to 2.15, like they've said, we were told that Meiji Goods donated window frames to a community school, and the window frames were produced using of cars that would otherwise have been wasted. So the question is to us to calculate the amount lost in terms of sales as a result of wastage of the wood. So first we have to know how the materials that were issued. So raw materials issued to factory is 16,570. This is the materials you issued, 16,570. And we have the information again here where it says 2.5 meters of wood is used to make one door frame. So if it says that, it simple says now we are going to say we are going to say 16,570, the material that we issued. These are the material issued, 16,570 divided now by 2.5, because it says 2.5 meters of wood is used to make one door frame. So this will give us how much? This will give us 6,628. This is what our expected. This is our expected material. So we are saying this one is a possible now. Our possible is 6,628. How much we produced? Produced is how much? 6,420. So the possible, the standard one that we expected it was this much, but you happen to produce this. Our target was 6,620, but you came up with this 6,420, which is less now. So meaning to say, we are saying this one is possible. Possible is equal to this. Produced is equal to 6,420. So now we are to look for difference now. We are to look for difference. So the difference is 6,628 minus 6,420. So this will give us how many? 208 frames. So that is the loss of production. There's a loss of production because of the wastage. It's a loss of production. We expected this much, but we happened only to produce less. Our target was 6,680, but we happen to only get 6,420. So this is the loss. So now it simple says we are going to compare with actual now. Like we said, no. We are going to calculate the selling price. We are to calculate what? Selling price. So we have 208, but we are told that the selling price per wooden door is 780. So we are going to say 780 multiplied by 208. So this will give us 162,240. So this is our answer. So 208 frames is this one that we multiply. We multiply it by the selling per wooden door, which is 780. So now we can record it now. This is where we are. So, like you remember, we have said that on our workings, this is where we are going to have 15,570. This is the material issued. Then we have said divided by 2.5. So then this gives us how much? It gives us 6,628, which we are going to say minus 6. This is the possible or the targeted one or expected one. Then minus to the one that is produced, the actual, which is 6,420. Then we are going to multiply that by 780. And this will give us 162,240 as our final answer. So that is that, good people. So now we are to go to another question. Now we are to go to another question, which is 2.2. So here we are on 2.2. 2.2. So this is where we are, 2.2. 2.4, that is kick it up manufacturers. As you say, it says you are provided with the information relating to kick it up manufacturers. The business manufacturers office chairs. So the owner, Nono Shilo, is happy with the increased profit. Note, where comments or explanations are required, you should quote calculations, figures, or trends. Give an explanation or reason in each case. So that is that. This is where we are now. So that is 2.2. So 2.21, because you are now under required 2.21, explain why it is important to calculate the expected break-even point for a business before the start of financial year. So that is what we are to answer now. So we can go to our answer book and answer 2.21. So this is where we are, 2.21. As it says, explain why it is important to calculate the expected break-even point for a business before the start of financial year. Why is it to calculate or calculate the expected break-even point before, even if we can, before we can start the financial year? So that is that. So this is to determine the minimum number of units to produce to prevent losses. This is to determine, it is to determine the minimum number of units to produce to prevent losses. Also, is to avoid running into cash flow problems. Is to avoid running into cash flow problems. Into cash flow problems. Also, it helps making strategic decisions before money is spent. Help making strategic decisions before money is spent. Before money is spent. So that is that. Now let us go to 2.22. Let us go to 2.22. 2.22 says Nono was not anticipating an increase in profits. Explain to her how this happened. Provide 2 points, quote figures. So here we are to quote what? We are to quote figures. We are to quote figures. That is that why profit increased, in short, why profit increased. So now let us look at the information why profit increased. So we have this information. So we can make use of this information, good people, why profit increase. So you can go through this information and see. So you can see now we have 40,500 in 2024. We have these 40,500 units. And in 2025, we have 42 units. It was 40,500, but when it comes to 2025, 42 units. So it means the units increased. So it means there was an increase here. There was an increase of how much? Of 1,500, as you can see. There was an increase of 1,500. So in percentage, you can say the increase is 3.7%, because you can see 1,500 divided by 40,500 times 100, it will give you 3.7. And this shows that more sales is equals to more profit. I don't know if we get to one another what I'm saying. Let me write it clearly. Here we are saying we were asked why profit increased. The profit increased because our units increased. So it tells us if our units increase that there will be more sales. And once we have more sales is equal to more profit. So that is why when you say 42,000 minus 40,500, it means now our increase here, our increase is what? 1,500 people. That is our increase. Here we're talking about what? Increase. This is our increase, 1,500. So in percentage, I'm saying it's going to be 3.7% increase, because you're going to see 1,500 divided by 40,500 times 100, and this will equal to 3.7%. So this simple says more sales is equal to more profit. That is point one. That is point one. So point two, to answer that question, point two, because we are asked to give how many points? 2 points. Point two is that break-even point decreased. Here we can say break-even point decreased. Break-even point decreased. Why are we saying our break-even point decreased? So if we can look at our break-even point, let us go to our break-even point. You can see our break-even point is how much? In 2024, it was 51,545 units. If we can check straight. But it decreased when it comes to 2025, which is now 31,200 200. So it means how much is our decrease then? So our decrease here is how much? Our decrease here is, as we are saying, break-even point decreased. It has decreased from 51,545 to 31,200. So it simply says our decrease, our decrease is equal to 20,345 units. So that is that. So in percentage, it simply says this is 39.5%. 39.9% decrease, because you're going to say 23,45,000 divided by 51,545 times by 100. And this will give us this much. 39.5%. That's what I'm saying. So this is the answers that you can now answer that question. I'm talking about this in the answer book. So remember, this was to explain that Nono was not anticipating an increase in profit. Explain to her how this happened. So this is whereby now you can talk about this, that units produced and sold increased from 40 to 42. That is by 1.5. So you are going to say units produced, units produced and sold increased from 40,500. 40,500. That is this to 42,000. So that is by 1,500 increase units. That is that. So it simply says this is by 3.7%. That is what I have said. So we're asked to give 2 points. So the second point we have said break-even point. Break-even point. Break-even point decreased, like I've said. Break-even point decreased. It decreased from 51,545 to 31,200. So that is by 20,345 units. So that is now by 39.5%. So this is how easily you can answer that question. This is how easily you can answer that question. So now let us go to 2.23. 2.23. 2.23. Here it is. So we are asked to explain why total fixed cost increased but fixed cost per unit decreased. Now we are to quote figures. So we are to quote what? We are to quote figures. So for us to give that, why total fixed cost increased but the fixed cost per unit decreased. So now let us go to the information and check what they are talking about. Fixed cost. So we are going to have total fixed cost. Let us look at the total fixed cost so that you can see where they are differenced. So here is our fixed cost. So here is our fixed cost. Here we have what? In 2024, we have 1,077,300. this is this amount. So in 2025, we have 1,092,000. So it means there was an increase of how much? Of 14,700. So that is that. There was an increase of 14,700. So, or you can just simple answer that question by, you can answer it simple like, let's go to our answer book. So here we are. So where you remember that we were asked to explain the total fixed cost increase but fixed cost per unit decrease. So you are to quote the figures. So you can talk about the economies of scales. Economies of scale. Economy of scale was achieved due to increased production, due to increased production. So that is when you're talking about from 40,500 units to 40, sorry. So I was trying to say that is from 40,500 units, 40,500 units to 42,000 units. So that is by 1.5 units. So that is how easy you can answer that question. So now let us go to 2.24. 2.24 question. 2.24. So here we are, 2.24. 2.24. It says identify two costs with figures that have been well controlled. For each cost, provide a possible action that kick it up manufacturers may have taken to keep this cost under control. So we can talk about direct material cost. We can talk about this direct material cost. You see that it was 36 rand. It was 36 rand. So it means direct material cost decreased. Direct material cost decreased from 36 to 34. So that is by 2 rand. So that is by 2 rand. That is 5.6%. Also, you can look at the selling distribution. You can see now our selling distribution in 2024. In 2024, it was 20 rand. But in 2025, in 2025 is 19 rand fed. So selling and distribution decreased from 20 to 19, that is by 0.7. So that is by 3.5%. So we can now write them in our answer book. Let us answer them. So like we've said, we have for the direct material cost decreased. Cost decreased. So that is from 36 rand to 34 rand. So we have said that is by 2 rand, which you can say this is by 5.6%. Can say this is by 5.6%. 5.6%. So we are asked to give what action or solution. That is to say, bought in bulk to take advantage of discount. So direct material cost, as you can see, it has decreased. So if you buy in bulk, so you get the discount. Also, we can say Well-trained supervised workers result in minimum wastage. So we are saying well-trained, super, well-trained or supervised workers or supervised workers, resulting in minimum wastage. In minimum wastage. As you can see that our cost decreased. As you can see, our cost decreased by 2 because it was from 36 to 34. One thing decreased, it means that our employers were well supervised, that they didn't have too much wastage. They have what? Minimum wastage. So that is that. So another reason can be what? Selling distribution, like we have said. We have said selling distribution. We have said selling distribution decreased from 20 rand to 19 rand 30. So we've already shown that by figures. So that is by 0.70. So you can say that is also by 3.5%. So now the action that we are to take or solution, that is whereby we can talk about improved advertising, or increased use of digital marketing, digital marketing, because you can see our selling distribution decreased. So improved advertising can make awareness of our products, and then so you can see our cost is going to it went down from 20 to 1930. Also, you can talk about paid less commission. And talk about paid less commission. So that is that. Also, we can talk about negotiated lower rates with courier companies, or they have improved in route planning. So that is that. So this is the end of this presentation, good people. Thank you very much for your time. Please make use of this presentation, as it is very important, as it's going to help you to prepare for your term 2 exam. I thank you.